Thank you for joining the Investors Gate. I am your host, Austin DeNoce, and today I'm going to be talking about crypto, the SEC, regulation, and how all that is playing into the Bitcoin ETFs. I'll also discuss my own opinions on where I think the regulators are in the right, what I believe we can expect from them, and what I would suggest to crypto investors looking forward. All right, let's do it. All right, crypto and regulation, hot topic. So let's start off with just talking about the SEC, the regulator, and Gary Gensler, the head of the SEC. It's no secret that he used to teach blockchain at MIT. He knows his shit 100%. If you watch his lectures, he's not some uninformed person. He's definitely watching this industry, teaching about it at a high level for many years. So in my opinion, that is kind of a good thing. I mean, the last thing you would want is some sort of boomer who doesn't know anything about crypto, still believing that it's 99% used for drugs on Silk Road or something, So it's helpful that we have someone who is knowledgeable about the space regulating. In fact, I would go as far to say is that he is a Bitcoin holder. I would be shocked if he wasn't. So he probably has a financial incentive, along with just being knowledgeable and wanting to foster the space rather than hamper it. He's holding on. He's probably hoping for things to work out. So just bear that in mind whenever you're thinking about this, because everyone seems to look at him, or a lot of people at least seem to look at him like he's the boogeyman and he's coming for Bitcoin or crypto. And that might be somewhat true for the crypto part, which we'll get into. But I think as far as Bitcoin goes, it's 100% safe. I mean, he can't stop it anyway. And he knows that because he is familiar with the technology and the extent to which it's decentralized. So he's well aware of him just kind of creating an environment where Bitcoin can thrive, maybe just within the confines of his conception of regulation around it. But I wouldn't go as far as to say that he is going to regulate Bitcoin away. He would maybe regulate it in various ways as he can, just to peacefully align it with the legacy system. But I just don't see him doing anything overly negative for Bitcoin. I mean, if you watch his lectures, he even acknowledges and discusses with the class how the legacy financial system uses considerably more energy than Bitcoin ever could. So he is not an enemy of crypto. He's just concerned with some of the other assets within the space that maybe should be regulated as securities. And honestly, I kind of agree. I mean, not only are we seeing rug pulls every day with investors holding worthless bags, like the whole Squid Game coin thing. I mean, that stuff's pretty ridiculous. I'm a free markets guy, and I think people should be left to their own devices just to figure it out. Do you learn from your mistakes? But you can understand as someone with a mandate to protect investors, seeing these rug pulls and craziness going on in the crypto world and not being motivated or somewhat interested in regulating it, figuring out how to avoid some of these crazy scams, because it is a problem. I think everybody can acknowledge that. So I don't think it would be weird to assume Gary Gensler at the SEC will try to address it, protect people. Hopefully they don't overregulate it, because that's always the concern. You never know what they're going to do, if they're going to push it too far. And so I would rather them err on the side of caution and maybe just let investors learn their lesson. But you can still understand why he would want to step in or work on regulation to avoid things like this happening in the future. You can have your own opinions about regulation in a more fundamental sense, like from first principles, about whether that's appropriate. You want to take the more libertarian approach or capitalistic approach, whatever. That's neither here nor there. But his job as the SEC head is to regulate securities, things that are securities. And as I said, you can argue whether that should be the case. But in the world we live in now, that's what he does. And if something functions as a security, it is his job to regulate it. And I think it's clear that a lot of these crypto assets are certainly functioning as securities. And just to go into a little bit more detail about why I think he could be in the right in terms of regulating certain crypto assets is you take something like crypto.com or Huobi or Bitrue or one of these other brokers, exchanges that bootstrap their business with their own native token. It really is a security. I mean, they're essentially distributing it out to customers, to users, through whatever way, it gets you discounts on fees, or even a lot of people probably do just speculate with it. But all of these exchanges, brokers that are issuing these coins are likely pre-mining them, holding on to it, or benefiting in some sort of financial way by, for lack of a better term, listing these coins. I mean, realistically, how much different is someone like crypto.com selling the Crow coin and making money off of it to fund their business than someone like Coinbase going public and issuing equity? I mean, in my mind, they're really too similar for Gensler not to be treating them the same or in a similar way. And this is not to say that they're going to go to zero or be delisted or, I don't know, some crazy thing. But it is something to look out for as an investor or speculator if you are involved in one of those exchange coins. And that's because Gensler is likely coming for them. And that sounds boogeyman-ish, and I don't mean it to be that way. But he is going to regulate it. If it walks like security, talks like security, he's going to treat it like a security. And it's just hard to say what that would even look like or how that would affect the price of these different assets. It could depend on the business. For some of them, they've probably been thinking about this, preparing for it. I imagine crypto.com, with how big they are thinking about the regulatory framework ahead of them, how this is going to fit in. And they could be very well prepared to make that transition or those adjustments that someone like Gensler would be asking them to figure out. And so that transition to security and some level of compliance could be relatively smooth and maybe only have a very short-term effect on price. But for other projects, smaller ones, maybe it could be very devastating. Regulation in general can be expensive or just difficult to go through. And for some of these smaller businesses that don't have the means or that don't have the ability to meet those potentially high standards, it could mean they just get rid of the coin or the liquidity dries up for whatever reason. So in general, I would just advise investors to be cautious, especially with those coins. Now, as for the other coins, because that class of coins for the exchanges is very small, it's a very select group. But for all the other main cryptocurrencies, crypto assets, and even some of the more obscure ones down the list that are actual projects, it's going to be a little bit more confusing, or there's a lot more gray areas. So let's just go through a lot of these main assets one by one and talk about how it's likely to be regulated or how Gensler and others are viewing it. So as I've alluded to, Bitcoin, being that it's sufficiently decentralized and essentially unstoppable, most regulators have acknowledged that they're going to accept Bitcoin as a monetary phenomenon, as a financial asset that's in this new world of financial capital markets. Also, the fact that Satoshi Nakamoto is pseudonymous does mean there isn't a head of the snake to attack. There isn't some sort of central body for Gensler or whoever to regulate or benefit from Bitcoin as some sort of security. So Bitcoin is almost certainly in the clear. Ethereum is probably in a similar situation, given it is the next decentralized and I would say most likely sufficiently decentralized. Although there are some concerns around Vitalik and the Ethereum Foundation having an oversized influence, but I still think it's most likely in the clear just because of how large and diverse the community is. So it is almost like an internet nation state the way Bitcoin is. As for some of the other projects like Cardano, Polkadot, Solana, they are likely okay or safe from regulation or classification as a security just because Cardano and Polkadot specifically definitely place it as a core tenet. It means something very important to them. The founders, Charles Hoskinson and Gavin Wood, they really do want to be decentralized and they are taking steps to make it that way. Cardano's community especially is very decentralized. It's huge. And so they are trending in the right direction. They will almost certainly be decentralized to the point that Gensler would not be interested in attacking them or classifying them as unregistered securities. Solana is a little bit more centralized, although it is, I believe, trending in the right direction. Given how expensive its servers, nodes are, whatever you want to call them, it will never be as decentralized as something like Bitcoin. It's just too expensive and requires too much equipment to run their servers. But they've made a calculation to value speed and efficiency, which is fine. It makes them a healthy competitor, a true competitor to Ethereum because of the scaling issues. Also, Solana is really integrating with the legacy system. Got the financial cartel, so to speak, backing it. A lot of big investors, big names, and I don't think Gensler's going to want to step on their toes by overly regulating it. He'll probably view it as a lot of these other ones as just being a utility token rather than a security or anything like that. We'll see, but I would just say that's another reason why Gensler will probably avoid attacking Solana. All his friends on Wall Street are pretty heavily in there. As for the other projects, the more obscure altcoins, the key thing I would focus on is just decentralization. Because if there isn't a central organization, platform, business, company, whatever you want to call it, if there isn't some sort of central body to attack, Gensler can't view it as a security. There's no one to benefit from the asset as a security or the way they would by issuing equity. So if they are sufficiently decentralized, they should be okay. Now, it's going to be hard to figure out what that means, what is sufficiently decentralized. And actually, that kind of leads into the XRP or Ripple Labs SEC case, kind of what they're trying to figure out right now. Because Ripple Labs in the beginning, when they first issued XRP, it did somewhat function as a security. It did help Ripple Labs grow, and so it is a gray area. And they did have clear intentions and goals for XRP to be decentralized. That was the goal of the project. They wanted it to be a decentralized currency in the future. It's very clear that was the intention, but the problem is a lot of these projects just have to be somewhat centralized in the beginning when they're first getting started. So where do you draw the line? Do you say, okay, you have this amount of time? Is there like some sort of roadmap where you have to get to decentralization or to this level of decentralization by this point? And so it would be nice to see XRP classified as something like a commodity or currency. It won't be classified as a currency yet, but maybe if the SEC lost the case and the court ruled that it was a commodity of some sort, that would be very good language to see come out of this case. It would set a really good precedent for a lot of these other crypto assets projects that are doing similar things, where they're kind of just starting off, maybe a little bit centralized, but with the clear intention to become more decentralized, sufficiently decentralized. But that may not be how the XRP case plays out. For one, they could lose. It could get classified as, the selling of an unregistered security, which would not be good, and it would really send shockwaves throughout the crypto market for a lot of those up in the air crypto assets. And also, it could just be dismissed off of some sort of trivial or procedural reason. For example, one of the main reasons it could be dismissed is because the SEC didn't give fair notice that Ripple Labs was selling an unregistered security, because I believe they didn't know ahead of time that this was going on and they just didn't say anything. They didn't issue notice that this was something of concern, and that alone could be a reason that it's dismissed, which would be good for Ripple Labs and XRP, but at the same time, it doesn't really offer the same clarity about what to expect with these other projects, because you would hope if it was classified as a commodity that reasoning and logic would be extended to these other projects as that precedent was set. But if the courts only rule that the SEC didn't provide fair notice, that is problematic because it doesn't really set much for precedent. It just says the SEC needs to give these people fair notice, which they can do, but they would still view them as maybe selling unregistered securities. So that's an important case to watch if you are trying to gauge what projects the SEC will view in a positive regulatory light. That is, they won't be tightening regulation by classifying them as securities. But I think as long as you really do your research and focus on decentralization, you should be fine, because that basically means there's no way it's going to be classified as a security. Now, you want to be careful because there are a lot of projects in the crypto sphere that say they're decentralized. They try to operate under this title of DeFi, when in reality, they're actually pretty centralized. So you want to make sure you really do find the decentralized products. Something like Uniswap or Aave they are probably sufficiently, if not entirely, decentralized to where Gensler, the SEC, wouldn't really be motivated to attack them. They couldn't attack them. There's no centralized body. There's no head of the snake. But projects like Crypto.com's Crow or Huobi's Coin, BitTrue, one of these other exchanges that kind of bootstrap their business with this token they issued. And not that it doesn't have uses within their ecosystem for helping with fees or whatever, but I find it hard to view them not as securities. I mean, they are clearly centralized bodies, they are businesses, and they are issuing these coins to help their business. And owning the coins in a lot of ways is like owning equity in the company. I mean, let's take FTX, for example. You know, you hear some good news about them having a deal with a new celebrity or whatever it is, and you're like, oh, FTT is probably going to go up. I mean, how is that not a security? So I am sympathetic to Gensler in that it is probably his job to regulate those. You can have your own debate, argument about whether or not the regulation is right in the first place. But as the head of the SEC, that is his job to regulate securities. And if these things are securities, you can expect him to come for it. So just to summarize, things like Bitcoin, Ethereum, being that they're grandfathered in, they're probably okay and they are sufficiently decentralized. I don't see regulation coming for them in an overly negative way. The SEC may regulate it in different ways, subtle ways, whatever, just to try to peacefully integrate it with the legacy system and exercise a little bit of his power just to maybe let the Bitcoin people know that the SEC, is the law of the land. Could be a little bit of flexing going on, you never know. Other projects, like some of the main smart contract platforms like Cardano, Polkadot, Solana, they're probably good too, just because they are fairly decentralized, trending in the right direction, and already there, most importantly. I would say they're probably already at a sufficient point of decentralization to where Gensler feels comfortable viewing their coins as utility coins, tokens. So they're probably good. XRP is up in the air right now. I think it is decentralized enough. I think the real issue that they're mulling over in the courts is whether or not it was a security earlier on, which I think it maybe was. Hard to say, but that precedent will be important and really lay the foundation for a lot of these other projects and what they can expect in the future. But most important thing to focus on is decentralization. So just keep that in mind if you are an investor looking into some of these other assets, because that will be the key to avoiding Gensler and the SEC forcing any of these other projects in between a rock and a hard place where they have to make this hard, maybe costly or just difficult transition into compliance and just how to navigate maybe becoming a security or figuring out how to register it or avoid it. It could just lead to a lot of hurdles that you don't want to deal with. So just focus on decentralization. All right, so the last thing I wanted to talk about was the Bitcoin ETFs. Gensler and the SEC recently approved a number of futures Bitcoin ETFs, and I think this is a very important distinction to be made because there are two main types of ETFs. There's the spot ETFs and the futures ETFs. So the difference is spot ETFs carry the actual underlying asset. So a spot gold ETF would actually hold gold, and a spot Bitcoin ETF would actually hold Bitcoin. The futures ETFs, however, they just hold futures contracts. So they don't actually track the price of the underlying asset like gold or Bitcoin as closely as you'd like. It varies. And so this actually will lead those contracts, those ETFs, to be trading at a premium, which is called contango, or at a discount, which is called backwardation. And most of the time, these ETFs are trading in contango at a premium, meaning you are paying more to buy it than the spot price of the underlying asset, gold, Bitcoin, etc. And you might be saying, well, yeah, why don't you just buy it in a discount? That's fine. This sounds like a good strategy. And that is true, but the futures ETFs are almost always trading in contango, meaning you are almost always going to be paying more to get the same exposure. For example, if Bitcoin was trading at $60,000 and the futures contract could be trading at a premium equal to 65 or even 70,000 plus. So you are paying a substantial premium in order to get that same exposure. And the reason for this is because these contracts that are held in the futures ETFs are rolled over every single month. So not only do you incur the trading fees associated with that, but if the contract is trading at a premium, you are paying that difference every single month they're rolled over, which adds up to a substantial amount over time and will really bleed you dry if you're not trying to do the cash and carry trade that I think is really the reason Gensler approved them. And what that is really just a way for institutions or smart money to arbitrage the difference between spot and futures. Because if they sell the futures when it's trading at a premium and buy the spot, they can basically have a risk-free trade to pocket that spread, the difference between the two. And so these futures ETFs actually give people that are aware of that kind of trade or with the know-how to do it, to execute it, it gives them the ability to have these risk-free opportunities to make more money essentially. So the futures ETFs is really a way for Gensler, the SEC, to look out and take care of Wall Street, whether people want to acknowledge that or not. But they're not really good vehicles for just long investors who want to buy spot and get exposure to the underlying asset, which is most people who would be looking to buy the ETF. Most people aren't arbitrageurs who are really well versed in that kind of trade, and nor should they be. It's not really necessary. I mean, all you really need to do is buy Bitcoin. So usually you want to buy these spots unless you're the type of person who is interested in making that arbitrage cash and carry trade, which is fine. I mean, it's a smart trade. I would do it. But ideally, you want to be long in a spot ETF because it tracks the price directly. You know, you're not ever dealing with this contango or backwardation, any of these rollover fees or anything like that. And you are getting the exposure that you want, the exposure to the underlying asset as it is, as the price trades right now. Now, I already kind of alluded to this, but why would Gensler do this? To protect investors? Maybe there is an argument to be made there, but it was for the boys on Wall Street because it gives them this opportunity to make money at the expense of retail. You know, I can be charitable and maybe play devil's advocate because there is an argument to be made that this was in some sense a way to protect investors. And the reason for that is because of volatility. Bitcoin is well known as a super volatile asset, sometimes with these cascading liquidations that lead to wicks, $10,000 down, something ridiculous, right? And that volatility is hard to stomach for a lot of investors. I mean, imagine if you were a traditional investor who generally has like a 10% stop loss that works for you, which you add to Bitcoin, and you just get randomly liquidated because of this crazy volatility. Even if in 10 minutes it's back to normal whatever price, that can be a very dangerous thing as it takes you out of your trade, liquidates you because of your stop loss, not recognizing the volatile nature or how to appropriately manage that volatility. And that is a real concern because, you know, it happens in Bitcoin. And even if they aren't dealing with the issue of a stop or something like that, for a lot of investors, just seeing their portfolio fluctuate that much can be uncomfortable or just not ideal. So with the futures contracts, because they have this limit up, limit down rule, they aren't subject to the same volatility, which is also because they don't directly track the price. They are futures contracts. They aren't the spot. So the volatility can be more managed. If there is some crazy spike in Bitcoin, it doesn't mean there's a crazy spike in the futures contract. Provided the price comes back a little bit, the contracts might go limit down or limit up, but you're protecting yourself a little bit from the volatility. Another reason that he probably chose to approve the futures contracts was because they're regulated by the CME, which is a well-established body with developed infrastructure around regulation, and it lets Gensler essentially keep a closer eye on the futures ETFs. I think in some ways he's trying to wrangle in this Wild West mentality of crypto, and one of the ways he could be doing that was saying, hey, we're going to do this by the SEC's rules, we're going to only approve it for this in this highly regulated way through the CME, so there could be a lot of things that are at play. And though I do not think the main reason for this was to protect investors, because I'm a free markets guy and I think people should be allowed to make the investments they want to make. They should be allowed to invest in a spot ETF, assess those risks, and learn from their mistakes if any are made. I think forcing anyone who wants to be in Bitcoin to buy the futures ETFs is absolutely not looking out for investors. It's looking out for Wall Street, who knows how to arbitrage those differences between spot and futures. So if Gensler was really looking out for investors, he probably would let them get the more accurate exposure to Bitcoin without dealing with all these fees or costs associated with the futures ETFs and the premium and contango, because it's just I mean, clearly this stuff is confusing and you can't expect people to understand this stuff without doing considerable amounts of research. And they shouldn't be expected to. I mean, they should just be able to buy the underlying asset they want. And I don't think Bitcoin should be an exception to that. Whatever. Gensler may have his reasons. There may be minor benefits to curbing the volatility of Bitcoin and offering Bitcoin exposure in a way that better suits some people's interests, but I really don't advise investing in it if you're just trying to be long Bitcoin. Because if you are just trying to be long Bitcoin, you should look to buy spot Bitcoin on exchanges, get your actual keys. That's super important. It's part of the ethos of crypto, really. But also, you don't have to deal with any of these fees or these nuances of financial markets. But if you are unable to buy that because all your money, investable money, is parked away in a 401k or retirement account, and the only things you can invest in are what's available to you via your broker, and you're saying, well, if the futures ETF is all I got, who cares? But I would say, number one, you could hold off until a spot ETF comes out. I mean, I wouldn't hold your breath because Gensler has already shot down a number of them, so I don't see that coming anytime soon. But if you are in a rush, I would look to GBTC, the Grayscale Bitcoin Trust, because like a spot ETF, trusts do hold the underlying asset. They don't, however, track the price that closely because they have these lockup periods. And because of that, actually, they can also trade at discounts and premiums. But unlike the futures contracts, which are almost always trading at a premium and don't really offer a great long-term investment opportunity, the trust commonly trades at a discount. I believe it actually is at a discount right now. So in some sense, it's like you're buying Bitcoin at $55,000 maybe when it's trading at $60,000. And I'll be the first to say it's not going to be as good at actually buying Bitcoin from an exchange and holding it yourself, but it is better than the futures ETFs, especially when you consider it's trading at a discount to actual spot Bitcoin. So even if you feel trapped because your investable money is in a retirement account, 401k, or the like, and you are feeling driven to invest in the futures ETFs regardless of the extra costs, just because you really want exposure to Bitcoin, I would strongly consider focusing on the Grayscale Bitcoin Trust. They also do have plans to transition that trust to a spot ETF eventually. As I mentioned, I don't think that's going to be happening anytime soon. Gensler and the SEC haven't really signaled they're ready for that or they want it in the near future. Maybe a year from now or more, that will be approved and you can transition there, or Grayscale will transition you automatically. But in the meantime, I would buy spot Bitcoin if you can, or if you're trapped in your own retirement account, buy Grayscale Bitcoin. And just hope the regulators begin to change their mind and approve the spot ETFs eventually, because that will be ideal if you're trapped in that retirement account. But for everyone else, always buy spot Bitcoin. Just go on an exchange, get a cold wallet, park it in there, put it away, don't worry about it. It's your retirement account, save it for your kids or yourself 10, 20 years down the road. You won't regret it. And it's just not worth waiting on the regulatory clarity to get invested in a spot ETF. I mean, you'll likely miss out on a lot of upward movement, appreciation, and that's just not what any investor wants. But notwithstanding those concerns, I think the regulation around crypto is evolving and will continue to evolve. It is a new industry. It's going to be messy and chaotic. It's hard to predict. We're watching it be written as we speak, crafted in some way that allows it to peacefully intertwine with the legacy system, because at the end of the day, that is what the SEC is, and they're going to try to look at everything and fit everything within that lens, which I think is healthy for crypto, Bitcoin, to evolve and find a place in the modern world, the modern markets. It is a disruptor, but it also needs to play nice in a sense for it to peacefully and successfully make that transition. For those reasons, I wouldn't fear regulation. I think it is validating and important. We need to get across this bridge if we're going to get to the next. Just because the SEC is hesitant to approve a spot ETF doesn't mean it won't happen in the future. And just because they're having this case against Ripple Labs and XRP doesn't mean they're going to be securities or other crypto assets are in danger of being securities. Some are, as I talked about, but do your research, keep an eye out on the SEC, and understand where they're coming from. Because regulation doesn't have to be the enemy. In fact, with more of this regulatory clarity, institutions and smart money that have to abide by these regulations, they have to abide by certain SEC standards. They can't invest their money everywhere. They need Gensler to come up with some sort of regulatory framework for them to actually get exposure. And so you want this to happen. It should happen. The sooner it happens, the more some of this ridiculous money can flow into crypto because they know where they stand. They know they're not going to have to deal with some crackdown or the headache that is associated with this transition. So I like to keep an open mind and a positive attitude when I'm thinking about all this regulation, because it really isn't that bad. And I am hopeful. I mean, this is very new. We'll hopefully see better results as time goes on. I mean, the fact that we have any ETFs at all is pretty amazing and historic. And the fact that regulators have really just acknowledged Bitcoin as a thing and Ethereum as a thing. They're like, yeah, it exists. It's not a security. So stay positive, keep an open mind, keep your eye on the SEC for any further developments, because everything's changing so fast. But if you do your research, you focus on decentralization, you find the projects that are going to thrive in this changing regulatory environment, you will be okay, because there is a place for them. Crypto is by no means stopping here. It's going to consume the future, and you just need to imagine what that future is going to look like for you to find the projects that fit within it. So that about does it for today. Hope you enjoyed. Hope you learned something. Thank you for tuning in. And as always, best of luck.